World Copper released drilling results recently from its Escalones project in Chile. Here to talk about those and the catalyst investors can look forward to, we're joined by the CEO of World Copper, Nolan Peterson. Great to see you. Now, for those who may be unfamiliar with World Copper, can you give us a brief high-level elevator pitch for us?
Yeah, so World Copper is a Vancouver-based junior mining company. We've got exploration and development projects in Chile, that's Escalones, as you mentioned, as well as the Zonia project in Arizona. What kind of sets us apart from some of our peers in the same market capitalization category is that both of these projects have established resources and both have preliminary economic assessments or PEAs attached to them. So we're actually fairly far along in terms of development compared to the general market, and we're looking for the next steps, looking to take the next steps to advance these projects.
Nolan, these recent drilling results were at the Mancha Amarilla zone of Escalones. I'm just wondering if you think that based on what you're seeing, and I know it's early days, that you do indeed may have a larger deposit than your original assessment told you.
Yes, so absolutely. So let's give a kind of a geography of the situation at Escalones. We acquired the project based on the Meseta. The Meseta is the main resource that our PEA is built upon. Immediately to the south of that is what we call the Mancha Amarilla. This is immediately adjacent. It's kind of where the drilling stopped. We have had our eyes on this as an opportunity to make the project larger and add to what we believe is already a fantastic resource. So we set out to drill the Mancha Amarilla down the western flank there. We drilled to explore and confirm that the mineralization continued and that the thickness of that oxide layer was similar to the main resource. We confirmed all of those points of our objectives. And now we have set ourselves up to drill further east, which will give us the opportunity to expand the resource even further.
Now, as far as Escalones, can you give us some headline numbers that may pop out at investors?
Yeah, so the numbers should definitely pop out to anyone who follows the mining space, certainly copper. We put out a preliminary economic assessment or PEA in February of this year, so it's relatively fresh at 360 copper, which is a little bit higher than today, but still probably a fairly strong copper price long term. It was a post-tax NPV of $1.5 billion US with a 46.2% internal rate of return and a 2.2-year payback for only a $438 million investment. It's a very modest investment in the copper space, and those are very strong economic numbers in any industry, certainly in mining. So we're very pleased with those results, and they should pop out at people.
Now, as far as your permit, you've got more than 3,000 meters drilling left to do. Could you give us the next steps? And secondarily, at this time of year in Chile, does weather become a factor?
Yeah, so that's exactly right. This is winter in Chile, or coming out of winter soon. It's just as we're about to enter into it. So drilling basically stopped for the Escalones project after we finished the Mancha Amarilla. With the remaining room from the drill program, we can now focus on the eastern skarn. Now, this is the skarn which flanks the main deposit at the Meseta and also flanks, we believe, the Mancha Amarilla. The skarn tends to be of a higher grade. We certainly observed that in the Meseta area. So as we continue its track to the south as well, similar to what we did on the Mancha Amarilla main deposit extension, we would look to extend that there, and that would eat up the remaining meters that we have.
All right, Nolan, let's move to Zonia, which you previously have called a no-brainer, a slam dunk. So what are some of the factors behind you being able to have an opinion like that?
Yeah, so let's think about what we as an industry should be looking for when we're assessing a new project and how quickly it can be made into one that generates cash. Well, what are some of the biggest risks? Funding is a huge risk. Permitting is a huge risk. Jurisdiction is a huge risk. There's many others out there, but those are the ones that are kind of outside of your control when you pick the project that you have, right? So this is sitting in the United States. It's in Arizona. That's a prime mining jurisdiction for copper. It's a low-cost project. It's about $200 million, but it's an oxide project like Escalones, which means it has a lower capex for a higher production throughput. That's an economic advantage, and it has very strong ratios too. And finally, what really makes it a slam dunk or no-brainer, in my opinion, is the permitting angle. This project sits entirely on what's called private patented land in Arizona. That means that it can be permitted and put into construction in potentially under 4 years. That's a very quick turnaround in the mining industry, where the average project takes 5 or more years to permit, and certainly in the United States, in a prime jurisdiction, where it can take, in many cases, actually decades to do. So when you look at Zonia, it is a very strong profile for a type of company or partner who we are exploring opportunities with as a kind of next step project for them, where they can fund it and build it, and we can put it into production together, or they can invest and see us put it into production. And yeah, and it will generate strong cash flows when it is in production.
As far as Zonia and the timeline, are we still looking at PEA sometime this year? And then you've got feasibility in 23, and then construction and production 24 or 25. Is that about right? And if so, can you run us through that?
That's correct. Yeah. So the last PEA on Zonia was done in 2018 and was done by a different company, Cardera Resources, which is the company we merged with. So our first plan is to update that PEA as World Copper, put our thoughts on the engineering and the size and everything into it to see if we can make the project better, but certainly to update it to today's economic conditions. That will be delivered. We are targeting Q1 of next year, and then we would aim to move into a PFS feasibility study level study targeting 2023. And then assuming permitting goes well, which we would start in conjunction, looking at construction and then operations 2024, 2025.
Now, pulling back the lens to copper itself, one of the numbers that stands out, and it's in your slide deck, is the potential for a deficit of more than 12 billion pounds by 2030. So are you a firm believer that we will see a copper crunch, and maybe sometime starting in the middle of this decade?
I am a very firm believer in that, very bullish on it. It's very easy to look at the copper price today and or this uncertainty in the market today and think, well, this is what's going to continue. We always have that sense of recency bias, but every person who follows the market, copper market, can see that there is a gap forming and it will be pretty much guaranteed. And the reason we can know that with a lot of certainty is you can't just bring new copper production online quickly. In many ways, it's not like an oil well, for example, where they've been shuttered and you just turn it back on. In some cases, I know some people will say it's not that easy, but it's even harder for a mine. So if there hasn't been a new mine that started permitting in the last 2 years or 3 years, then that means that any new mines are 5 years or more out from today. And let me tell you, there haven't been any real big, large new mines starting permitting or development in the last few years. Now, some will be coming on in the next couple of years, but those started years before that. So years of chronic underinvestment are going to catch up with us. And this is just assuming a steady increase in demand, which of course is always happened. There's more people being born every day, more demand for copper. And at the same time, almost paradoxically, copper supply is dropping. So it is a very real thing that's going to be happening. And we are like to believe we're at the forefront of that and are going to be setting ourselves up to benefit from it.
Lastly, Nolan, as you know, most CEOs think their company is undervalued, and you're no exception, especially when you look at a price to net asset value. So what is the market not understanding, do you think?
Yeah, first of all, I think that most of the market isn't really aware of World Copper. That's one thing. We have only been publicly traded since January 2021, so about a year and a half, and a lot has happened in that year and a half. Let me tell you, especially the last 6 months. So, first of all, normal marketing, you have to cut through the noise. You have to build your story. People have to hear about you a couple times, do their due diligence, hear about it from their friends and others in the investment community. What also helps is, building broker relationships who then market your story amongst their network. And we haven't explored those broker relationships yet because we haven't necessarily needed to. And now, of course, the way the market is right now, it doesn't make sense to do that. So once we get broader awareness, people understand the story better, get more comfortable with it, I think they'll really see and understand the value that we're sitting on. But at the same time, if there are people who like the story, want to learn more, this is an opportunity to meet up with me or others on my team and talk about the project, or move very quickly and get involved before some of the other slower movers do, and really set yourself up for when this downturn turns around.
All right. Thanks for your time, Nolan. We'll be talking down the road.
Thank you. It was a pleasure.
Okay. Nolan Peterson, the CEO of World Copper. Thanks a lot for joining us. We'll talk to you next time.
Thank you.